Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Hope everybody's having a fantastic evening so far. It was fun to see all you guys, or most of you guys, in the EA and copy trader webinar that we just did a few moments ago. That was really fun. I enjoyed that. And I'm excited because obviously being able to automate your trading is a very good thing. But yeah, just want to welcome everybody here. Also want to give a shout out to those of you in the recordings. Want to say hello to you guys and welcome you guys here as well. I'm excited that you guys would join us. But let's go ahead and get started with the COT report webinar tonight. As always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account. If you were to lose money, make sure that you're going through that process each and every time that you take a trade. All right, guys. So I just wanted to talk about the COT. Obviously, every week we could talk about the COT report. It's been a pretty good trading week. Yeah, most of our trades are doing pretty well. I'm actually just pulling up my trading platform here. Um, yeah, we've done pretty good this week. Let me actually see how I'm doing on my other account here. Give me a second. Yeah, I'm doing pretty good. I'm up. How much is this? I'm up like 2 or 3% on the week right now, with low risk settings from the scanner. So that's pretty good, right? Let's take a look at the scanner. For those that are newer watching this, we're going to talk about the COT report. I just wanted to. The thing is, the scanner is like so integral in the things that we do in our program because the COT data is built into the scanner, right? And so it already tells us what we need to do each week. But let me kind of introduce what the COT report is, just briefly, just in case we've actually had quite a few new people sign up for the program, and just want to make sure that they know and are not left in the dust. So the COT report stands for Commitment of Traders, and it looks like this. I'm just going to go straight to it. It's from the CFTC.gov website. This is a government authority here in the United States, and they released this COT report data, and it looks just like this. It stands for Commitment of Traders, and it shows us what the banks are doing each week. That's all it is in a nutshell, right? Um, um, and yeah, that's like I said, that's all it is. It's a report from the big bank from the CFTC, and it shows us if the banks are buying the euro. It tells us if they're selling the euro. It tells us that they're buying the British pound or selling the pound, and so on. And by how much, are they shifting long? Are they shifting positive? So every week on Friday at 4 p.m. Eastern, we get a new COT report, which is pretty cool. So when I go to this website, let me actually show you how I did that again for those that are new. So basically on the you go to cftc.gov, and then you just come over to market data and economic analysis, and you click on commitment of traders, and then you just scroll down to this one that says Chicago Mercantile Exchange. You click on short format right here, and this is like the main COT report. And the newest one will always be uploaded. The most recent one is as of January 2nd. Even though today is January 10th, it's always dated the previous Tuesday of the previous week. The reason why is because the CFTC gets this data from the banks on Tuesdays, and then it takes about 3 days for them to compile this data. And then on Friday, they then give this data back out to people like you and me. They distribute it just like you see here. And they basically distinguish the banks and the institutions by what we call non-commercial participants and commercial participants. Okay. And I will spend just a moment explaining the differences between these two. Let's actually pull up the euro. Um, and this is probably the most common currency that's traded in the Forex world, right? So since this is the commodities and futures market, this is specifically looking at futures contracts. So we're not looking at necessarily at the euro dollar currency pair, because the CFTC actually doesn't monitor uh, currency pair contracts. The reason why is because that's actually a concept that's specific to each broker. So brokers actually create their own markets and they connect to each other, and they try to find out what the bid and ask price is of the euro, and they compete and all that kind of stuff. Um, Forex trading is a decentralized market. And because Forex trading is decentralized, um, what that means in terms of the COT report is you're not going to get Forex pair contracts on the COT report, because this is just specifically your contracts that are um, these are specifically your futures contracts. That's all we're looking at, right? So when you trade futures in the United States, you're basically just trying to find the, you know, individual currencies. You're not looking at pairs, right? So when I look at the euro here, I'm looking at just future contracts on the euro. If I wanted to look up the Australian dollar, I'm looking at futures on the Australian dollar and so on, right? And now that's you might say, well, that's not Forex though. Well, before you navigate away, like, let me tell you how valuable this is though. Like, if you're able to see what the banks are doing beforehand, or as they're making these positions, it's super valuable in determining what direction to go in the following week and so on. So I'll show you what we've done with the scanner. It's actually pretty genius. Like some of the things that we've done, the checks and balances that we've built in, the derivatives that are built into the scanner and so on. It's pretty cool. So when I look at a COT report, but again, this is the data. Like, we get this once a week. That's why the scanner updates every week. People ask me, how do I make money in your program? Well, it's like, well, you got to use the context of the scanner, right? So much of the COT report is based off of, or so much of the scanner is based off the COT report. Like 66%, two-thirds of the scanner is just COT data, right? We also look at sentiment data too, right? And that helps us with the checks and balance concept. But it's pretty much just straight COT data if you think about it. And how we determine to look at that COT data, because there's actually a lot of ways you can look at COT report data, right? Okay, so the reason why we use the scanner on a week-to-week basis is because we get COT report data on a week-to-week basis. If we were to get COT report data more frequently, like let's say a couple times a week, we might adjust our expectation with the scanner to be more of a couple time of the week trade, right? But since we only get it once a week, we trade once a week. And same thing. If we were to get COT report data once a month, we might change how we look at the COT report data on a monthly scale, right? So it's week to week, and that's why I believe that this is the best scanner on the internet as far as picking the direction of the week. It's about one of the most accurate things I've ever come across or build, obviously. And it's much thanks to the COT report data. Okay. So when I come in here, guys, this is, like I said, the traditional just COT report entry right here, what you're looking at. And it segregates this into commercial, non-commercial, and commercial. So let me real quickly explain the difference between the two. So non-commercial is what most traders like you and me are looking at. I follow a lot of other companies and trading companies out there that also use COT report data, and they all do this, and they're not wrong. But I'm going to show you some of the things that we do differently that I think is much better and makes this data a lot more profound and enhanced and very useful. So non-commercials are basically your big banks, and they trade forex and futures with the intention of just making money. That's it. There's really no other motivation. Commercials are institutions, not just banks, but they can also be companies. An example of a commercial trader with the COT report would be like a pig farmer in the Midwest, who owns, like, let's say they're one of the biggest pig farmers, and they trade agriculture, right? And livestock and things like that. And so when they're buying feed, and they're also selling their hogs off, right? And so they have to use future contracts to balance act their business. So if they're expecting not so good of a year, they might try to maybe put a short in the futures contracts to kind of offset some of their losses, right? And maybe they're expecting a really good year, but they're not totally sure, and so they want to hedge their bets a little bit. They might also use futures contracts to kind of offset and balance act their business. Okay. So commercials, they use it as a necessary function. It's an operation of their business. It is not a way for them to execute trades so that they can go buy their next Lamborghini, right? That's not who commercial is, okay? Commercial, like I said, these are your honest folks who are just trying to balance their business and book of business, okay? And when I say honest folk, they're just big. These are still huge companies. Like we're talking about like Tyson Foods and other places that trade commercially on the CFTC, like big companies that have to do this type of thing. If you're a wheat or corn farmer, you same thing. You've got to, and you own thousands of acres, and that's all you do is harvest your wheat or corn. It's the same thing. So commercials, they're really not the people you want to follow because they're not aligned with your goals, right? What are your goals? Your goals are to trade Forex, to speculate so that you can put more money in your account. And those are the goals of non-commercial, right? So that's why we follow non-commercial, right? And everybody I know on the internet, if you go look up any YouTube video, they're pretty much going to teach you the same thing. Now, here's where we kind of break off a little bit. So, and this is where I think the secret sauce is, okay? So one of the things I want you guys to notice, this is like truly the secret sauce, okay? Like I've talked to some other traders that are finally getting, I think it's actually coming together, but as far as I'm aware, I'm the first to discover this. Like, I mean, unless I missed it someplace else, okay? I'm the first to like really put it out there because I'm starting to find other people doing it now. Um, on YouTube and other places. But so basically, I want you guys to notice this between non-commercial and commercial. So right here you have the long and shorts of non-commercial, and then you have the long and shorts right here of commercial. Which numbers are bigger? This is the secret sauce. Okay. Obviously, commercial is so much bigger than non-commercial. So there's actually a lot more commercially registered companies and institutions with the CFTC that label themselves as commercial participants and that have a lot of money that they trade. Okay. And then non-commercials represents a smaller, they're still huge, but it's a smaller portion. The thing is, commercial as actually the people that creates a market for non-commercial. So when these guys move, they actually provide liquidity for non-commercial. You and I don't create enough liquidity to provide for non-commercial. We just don't do that. So this guy is the market. Commercial is the market for non-commercial, the non-commercial market. So the one of the issues that non-commercial has is that when they're building out their position, they often get into a position too early. This is really common, and I know a lot of other guys that teach this, and they just don't know how to. We built the scanner to help kind of fix this and build in checks and balances on this, which I think is super cool. Um, and I'm trying to exploit that part of the industry a lot right now because it really is just like cutting edge stuff. But one of the problems I've heard this from other, I won't say specific names, but I know a guy in Atlanta, Georgia. He owns a company. They trade the COT. They built a scanner on the COT report. Maybe I give it away. It's like the only company out there that did this with the COT report. And one of the problems that they talked about is they use non-commercial, which is what you're supposed to do. But the problem is that they're getting into positions weeks in advance. They're like way too early to trades. And that sucks because if you get into a trade too early, you could wipe out your account, you could blow your account, and you're still in the right direction, but you're just 2 weeks early to the trade. And it really stinks, right? Um, And that still happens to me. I haven't completely solved that, but I've solved it enough, and I'll show you how I solved that problem. But it is one of the big like issues. And so now let's go back to what I was explaining here. So now that's a problem, how do we solve that problem? Here's how we solve it. So the thing is, guys, when commercial moves the market, like when they adjust their positions on a week to week basis, because they are so much bigger than non-commercial, when they make a change or a shift and it's significant, it's so much leverage because they are indeed bigger than non-commercials by a long shot that it causes profound effects in the following week in the market. Like it takes time for that new liquidity to soak in, okay, to the non-commercials, right? At different price levels and so on. It takes time for that to get soaked up by the non-commercials, okay? As a result, when these guys shift significantly, you'll often see a move in that direction, in the direction of the shift the following week.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code Friend of Steve, that's Friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Obviously, nothing's 100%, but yeah, you'll often see it. So, and I've back tested this, and this is one of the most consistent things I've back tested. And I've been trading 11 years, guys. Like, so that's a pretty consistent thing for me to say when this is one of the most, I mean, that's a pretty big thing for me to say when it's one of the most consistent things I've seen, is as far as picking a direction of the week, right? And again, I'm not saying it's going to be the direction it goes for the next 4 hours, 12 hours. And I'm not either saying that it's going to be like this linear move to the upside or downside. Like a lot of times you'll start the week and you can have a move up and then a move down, move up, move down, and then it ultimately ends higher, which was the expectation, but it kind of had a detour along the way, right? That's okay because we still got in the direction we wanted to go ultimately, right? So this is a big deal. So not a lot of people, I feel like I'm one of the only people. I do know of another guy that's starting to talk about this in Australia, as a YouTube channel. He's starting to talk about this kind of stuff. So basically, like I said, this market's so much bigger. So when they make a weekly shift, that's just going to cause a profound move in the market the next week. We're seeing that happen right now. So when you pull up the scanner, when you filter the scanner by shifts, these are the biggest shifts, right? So you've got, the pound Kiwi has a positive shift this week. Pound Aussie's positive. Pound CAD's positive. Euro Kiwi's positive. USD CAD's positive. Yeah, all of these are positive shifts. You can pull up the negative ones. Here's the NZD JPY is a negative, NZD dollars negative, Aussie yen, CAD yen. These are all negative shifts, right? Um, and so when they're negative, we're generally expecting a weekly direction to go that way. When they're positive, we're expecting a weekly direction the other way. Now, again, do we want to trust a signal just because it's flat COT data? Not necessarily. Can you win just by trading flat COT data? I think you can be a very successful trader by only trading just raw COT data. I definitely think you can, but I think you should also look at other metrics too, not just, and we actually look at the COT data from a lot of different standpoints too. We don't just look at it one way or another. It's multiple ways. Now, let me go back to this for a second. Um, so that's what we're doing when we're looking at at commercial, excuse me, is the shift in the weekly. That's how we look at it. I don't really care as much, and maybe we will in the future, but I don't care really that much if there's a lot more shorts here than longs. Um, all I care about is did they make a big move this week? Because again, I'm not trying to follow the overall direction of commercials. These guys are not the people I want to follow. They're not my guys. They're not the traders that have my goals. But when they move, it does affect me and it affects you. So we want to know that. Okay. Now, one of the other derivatives we've built into the COT report data and the COT or into the scanner from the COT report is this non-commercial. So let's talk about how we use non-commercial. So since we know we want to follow these guys, they are the banks and they do have our goals aligned. When these guys do develop a position, for example, on the euro here, they have a lot more euro longs than they have on shorts. Where has the euro been going over the last 3, 4, 5, 6, 7, 8 months? Mostly up. You can pull up any euro pair on TradingView or any chart, and you'll pretty much find that the euro has indeed been going up over the last several months. Why is that? Well, I don't know all the fundamental reasons. I'm just saying that the banks have reacted to that move, and subsequently, these smart traders have actually put themselves in that direction. So they are indeed buying the euro and not so much selling it. Now they do have some sells, as you can see, but more than double to the tune of double, they are buying the euro right now, right? So how does that factor into the scanner? Well, when you go over to the scanner over here, this long-term column right here, this signal has everything to do with non-commercials. So we do care about which direction they are going. So like with the pound Aussie, they've mostly been buying the pound Aussie over kind of like a longer term perspective. When I say longer term, this is like several weeks to several months at a time. So that's what you're looking at here when it says buy or sell or neutral. So when they have a bias one direction, it's going to be a buy. If it's buy. If it's neutral, that means there's really just not a bank bias. We just can't from the non-commercials. It just means we just don't have a bias, right? When you look at some of these others, like USD CAD here, this is a buy. Here's another buy. Here's a buy, neutral, buy, and here's a sell, and so on. Now, you'll notice as well, some of these say strong sell. Like if I filter this by signal, you can see the Euro Aussie and Euro Yen both say strong sell. Now, why is that? So here's the deal. You want to follow the banks until they get to the end. And what does the end mean? So basically, we want to follow the banks until they get super loaded up. Okay. So as they're accumulating, we want to follow the banks on a long term basis. Okay. So, like, for example, the dollar yen's been going up for a while, the pound yen's been going up for a while. Those guys have been accumulating those positions. Now, when they get overloaded, what does overloaded mean? When I'll give you an example. So if the banks have a really big euro position, but they have also a subsequent opposite position on the yen, which is what's happening right now, When you have a really big short on the yen and a really big long on the euro, and you pin those together, now you got a currency pair, right? Euro against the yen, right? You pin them together, and banks are hugely long over here and hugely short over here. So obviously, what's that going to do to the pair? It's going to send it up, right? But the problem is that once they're already super loaded up and they've already made their profits, what's left to do? Now the banks have got to close that trade, right? So what happens if the banks start to close out and take profits on the euro and subsequently take profits on their short on the yen? They're going to have an opposite effect of each other, right? Think about this. If you have a big long euro position and you got to close the euro, okay, um, the opposite of buying is selling. So now you're selling euros, not buying anymore because you got to offload that. What's the opposite of closing a short on the yen? So on the other side of that transaction, opposite of selling is buying, right? So in order to cover your short position, they now have to buy yen to close their shorts on the yen. So it's going to have, you have one currency. So you have one that's super long and then one that's super short, and they're both at the same time going to flip, or about the same time going to flip. So you don't want to follow the banks actually when they're super long and super short on another thing. You actually want to go against them. So, I was telling you, you got to follow the banks. Well, yeah, you got to follow the banks, but once they get overloaded, now you got to go the other way. It's like a rubber band, right? If you stretch a rubber band out, you can stretch and stretch and stretch for a while, but eventually rubber band's got to come back, right? It's the same thing. You ever seen an accordion instrument? You stretch out your accordion, you hear the music and then you stretch it out. Once you stretch it out all the way, what's left to do? Compress. You got to go back the other way, right? So that's exactly what we're doing. We built this into the scanner, and very few people I know of have done this. And I don't know of anybody who's done it the way we've done it, which is super cool. Last month in December, we had like 10 signals that were in crowded market phase. So that's the indicator we built into the scanner, this right here, crowded market. It's exactly the concept we're talking about right now. So when the banks get overcrowded, we want to know. So 5 out of 5 stars when nobody's done it this way, which I think is really, really cool that we've done it. We're a relatively small program, and we've done this, right? Which I think is so cool. So when it gets 5 out of 5 stars, that means that it's pretty much imminent. Okay, that means the banks are really big. Okay, so when you look at the Euro Aussie here, what that means is the banks have a really big Euro position, long, and then they have a really short Aussie. So that means it's imminent that a strong sell is probably coming in the near future on the Euro Aussie. Same thing with the Euro Yen right here. Really big long position on the Euro, really big short position on the Yen. So that's 5 out of 5 stars. So it's like, I would not want to go against that signal, right? Now, the only reason why we're kept out of this right now, both of these are neutral overall. Why are these both overall neutral? Well, we're keeping out of it because two things. One, um, we have a weekly shifter on the Euro Aussie that says it's positive, pretty positive actually. So that's the check and balance. It's like, okay, we don't want to get too early in this Euro Aussie trade. We know we want to sell the Euro Aussie. That day is coming very soon. But if we sell it too early, you could get burned really badly, right? So that's why we built these checks and balances, right? So it's right here. What we're saying is, hey, weekly COT data says buy, so maybe hold off on this until we can get a weekly COT data that says sell, and then we'll go ahead and get after it. Sentiment data is also strong buy on both of these right now, and that's the exact opposite of this signal. So what that means is retail traders are super short, and subsequently that's given us a buy signal. And once these guys flip out of strong buy and maybe even go neutral, or maybe even the other direction, I'm going to get a little bit more excited about jumping into these signals. So these signals are not going to change much week to week. Okay. Like these were the same signals we had last week as far as long-term signals go. They don't change a whole ton on a week. This is like the thing that will not change a lot. It's, it won't even change during the week, but it won't change at, even that much on a week to week basis. You could see the shifts change a lot on a week to week basis. Sentiment changes the most because it updates live, right? Um, and then, like I said, it updates live, and then long-term COT data updates every every week, but it usually doesn't change a lot. And then you have the weekly shift in COT data, and this changes every week, right? Okay, so right now, like I said, it kind of puts these checks and balances in there. So it says, okay, hey, if if we're having a conflict in these signals, then don't issue a signal, right? Just keep it neutral. Same thing with the Euro Aussie. There's a little bit of a conflict. So let's just keep it overall neutral until that flips out. If weekly shifts turn negative and long-term remains at a strong sell and the sentiment says strong buy, or excuse me, strong sell, then absolutely that's going to be an overall strong sell signal. Oh dang, Lee says I last night Euro Yen strong sell got in but hit my stop loss. Dang, yeah, yeah. Um, it's possible. I'm not sure where the sentiment was last night. Right now it says it's at 71% short. It could have been. I don't know where it was last night. But yeah, right now it's definitely, like I said, a neutral signal. Um, and nothing's perfect, right? But that's why we created those checks and balances. Just we created those checks and balances to help you not get into trades too early, right? We want to make sure that we have the purest weekly trades that we can distribute. But even then, those are not going to be perfect, right? The um, yeah, those are not going to be perfect. But yeah, like I said, overall, if you were to just take the overall signals every week, if you were to just take these, the ones that say overall strong buy and strong sell every week, I'm very confident you would create an income in the market. That's what I do. And I've actually had more success trading with the scanner than I've even had subscribing to other people's copy traders and letting other people manage my money for me. And it just kind of made me realize like how valuable what we've created is. It is one of the most valuable things I've ever seen. And it's pretty cool that we have that control over it, because it's here. This belongs to us. It's our indicator. It's for you guys. It's your indicator. It's all of us, right? Which I think is really cool. It's not something that belongs to, another company. We made it, which I think is really cool. Um, and we've developed it over time, and I think I don't really have a lot of plans to update it because we have updated it in the past, and the current way we've got it all set up is just really, really great. So if I were to update it, I don't know how much more utility we would get because it solves so many problems. I presented problems earlier in the webinar, and the scanner solves so many of those problems, right? It's even with the risk management. I mean, this is not a huge deal, but there's an ADR right here on the very right-hand column. This tells you what the average daily range is for each currency pair. And that's helpful to just have on hand. So you're able to just go in there and be like, okay, this is the average daily range for this pair or this pair. It helps with stop losses and risk management and that kind of stuff. Very, very nice. Lee also says, makes sense since the two JPY trades this morning are buys, pound yen and USD yen. Yeah, exactly. So, that's the thing. Like maybe you had a casualty on that euro yen. I mean, obviously it says neutral right now, but I don't deny the fact what you're saying. Like it totally could have said strong sell last night and now it's neutral. And, I could see a way you could have lost on that trade. But at the same time, like you mentioned, you've got other trades like this um, USD yen and pound yen. I mean, how good were those trades? Pound yen's a strong buy right now. How's that worked out? How has that worked out? Pretty good, right? So this is one of the top signals this week. Um, it's one of the top signals this week on the pound yen. This is where I made most of my money. Same for you guys, I think too. This basically did nothing for the first couple of days. Here's Sunday right here in this yellow area. Basically did nothing, and then just last night, boom, made all of our money just like that. And we'll let it continue. Hopefully, it keeps going. I'd love to see it expand a little bit more. That'd be awesome if it did. Okay. And then I missed this from earlier, but Lee or the other Lee was talking about like airlines buying fuel futures. Exactly. So when we were talking about these commercial data right here, that's a prime example of the commercial futures, right? Like airlines buying um, uh, petroleum futures. Exactly. 100%. So that's how we use the scanner, right? That's how we use the COT data is it comes into here. We used to, I'm not going to do this anymore because I think this is, why would you trade an inferior way of trading when there's a better way to do it, right? So I used to just send out, and I did this not even that long ago, but I used to just send out just flat raw COT trades during the week. I just said, okay, here's your shift trades and here's your leverage funds, and that's not a bad way to go. But the thing is, that doesn't create those checks and balances, right? You don't get sentiment. You don't get the advantage of being able to look at a holistic view of the market from a long term, short term, and an intermediate term, all put together into one. Um, why would you not do that? If you have the ability to visualize that on the scanner, why would you not take advantage? That's how I look at it, right? If you're only going to trade straight COT data, which can work, we've done it. It's worked. I've made money doing that. Like you totally can, but we've got the scanner which now looks at both shifts, non-commercial long term, and sentiment all put together, giving us the most accurate signals to take for the week. So I just have to put my money there. I really do. It's just been one of the most consistent ways I've traded. By the way, we made a cool video. We'll probably start wrapping up here. So throw your questions in the chat box if I missed something. But on Monday, we did a cool video. Let's pull up the calendar here. Everybody has access to this video, just so you know. I've made it accessible to everyone with any level of membership. So if you go to the calendar here, you can actually view this weekly training we did on Monday. This is a video on how to, if you're new to the program, which I know a lot of you are, and those watching this in the recording might be new to the program. I made a video on Monday, and we're going to actually also put this on the basic training, but this is where you can find it as well. It's the 8th, Monday the 8th. You can click here and watch this recording, and this will pull up the recording of a class we did on Monday where we talked about how to use the scanner strategies. So literally how to take the trades, the process of actually taking the. I literally went into an MT4 account and took the trades as if I were you, as if I were trading this and using a lot size calculator and going through that process. So my goal with literally everybody in the program is I want it to be airtight. I want everybody to be able to trade the same way, at least the bread and butter. If you want to branch off and trade the scanner and do some overnight trading, if you want to take the scanner and do some other types of things, that's totally cool. You can do what you want to do. But I want to make sure at least everybody in the program can at least do one thing, and that's take the week to week trades on the scanner from the start of the week and hold till Friday. If you can do that, I'm confident you'll make an income in this market. Um, and that would be just such a goal for me to have everybody in the program be profitable, at least by doing that alone, which would be super awesome, which I know you guys can do. So at least do that. If you want to branch out and do other things, that's cool. But I do want to make sure that in 2024, we get more people funded, lots more people funded. Want to make sure people have the success that they're looking for. And I believe that's the best way to do it. So, all right, guys. Well, I don't see any other questions. I think we've had a very productive day. We had live trading this morning. We have EA's copy traders tonight, and we did COT report. It's been a good day, guys. It's also been a good trading week. So I'm excited to wrap up the week. And Friday, I guess that's coming up now. We've got live trading tomorrow, so we'll do one more live trading and then we'll wrap up. All right, guys. We'll appreciate each one of you. Thank you for coming. Enjoy your evening, and we'll see you guys in the next webinar.